Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz from Bubba Trading. Thank you so much, Todd, for joining us on this last minute live stream here.
Elijah, great to be with you on this wild day on Wall Street and everywhere else.
Definitely. Wild couple days, it seems like. The Dow is down about almost 3,000 points from just 2 days ago. So, what do you make of what's happening in reaction to Trump's tariffs and all of this?
I think it's an overreaction to the markets. I think that you're getting a little bit of panic, a little bit of fear. You can see that if you look at the volatility index, which is trading close to 45, which we haven't seen that for years. This is a straight out now panic sell. We haven't had one for quite a while, but it did start Wednesday. Interesting enough, Wednesday at the close at 4 o'clock Eastern, the Nasdaq was up 400 points, and since then it's lost about 2,800 points since that top on Wednesday's close. And again, I think that you're having panic selling, which is understandable. I mean, even gold is being sold off hard here. And of course, it's being sold off, A, because it's been overbought, and B, some people are selling their profitable stuff like gold to support the losing positions they have, which is backwards, but that's really what's happening.
Now you mentioned how gold is selling off, silver is selling off. It seems like we have seen this at least for the last 20 years or so. When we see a sell-off in the stock market, you also see a sell-off in precious metals. That's mainly, it seems to be margin calls and kind of short-lived. Is that your view?
That's my view. I mean, I think that this is when you have panic in the markets, people sell profitable assets to support losers until they have to sell those as well. But I think what you're looking at here is a market that it's perfect timing for gold to go down because it was so overbought when we got close to 3,200. I mean, again, it went straight up. It was going parabolic. Markets don't work that way. The math, the geometry of the market never works. When they get too far overbought or they get too far oversold, there's always going to be what they call the mean reversion trade. And I would expect to see that. I would expect gold to go down even a little bit further, and then it'll get oversold. You'll get a little bit of a bounce. But I think gold, I'm targeting 2,800 in gold to re-enter. I mean, I'm not out yet. I still own physical metals, but to be a new buyer, I'm targeting 2,800, and I think we'll get there. I think that you will also see, maybe even possibly as soon as today, you'll see a big bounce in the equity market as well, just as a natural reaction to very oversold conditions. And once that is over, I think that'll be another selling opportunity. I mean, I think this is the start of the much bigger sell-off that you and I have talked about for about the last 12 or 14 months on this channel, that I expect a huge haircut to this market. And I think this is the beginning.
We have been talking about this quite a while. You're looking for, is it 50 to 70% a haircut on the stock market?
I am. And I do think that you're going to see the banks are in trouble. I think we haven't been told the banks are in trouble, but take a look at JP Morgan down $33, down 20% in 2 days. Okay. That tells me that the banks are in trouble, which is my opinion, that the phony stress tests that we get, they're over leveraged. And of course, these loans are resetting, and that's going to cause some of these issues. And of course, unfortunately for us taxpayers, we'll be the ones who have to bail them out again.
Do you see that right now the larger banks are safer in any regard? I mean, you mentioned JP Morgan, that's the biggest bank in America. The stock down significantly, but do you see any difference for people holding funds in the bank versus the regional banks versus these, the big six?
I think they're all in trouble. Again, obviously the big six are in that too big to fail category, so that makes them not as susceptible. But again, I think that they took full advantage when President Biden during COVID gave them the ability to go over 10 times one to lend. I think that let them get well too over leveraged. I think that that's why you're seeing the Fed trying to cut the Fed funds rate at the bank, which is what they borrow. But people are looking for rate cuts this year. There's going to be no rate cuts this year unless the Fed wants to fix the banks. But again, for the average person, there is going to be no rate cut. Our rates have not come down, even though the Fed's cut a full percentage point off the rates.
Now, when it comes to gold and silver, obviously we are seeing, and for those just joining right now, we're seeing a sell-off in everything, including the metals. But one thing I was noticing today, and it might be an interesting thought for our viewers about swapping gold for silver at the moment, because we're seeing a historic high of 100 to 1 on the ratio. I don't think we've really broken through, correct me if I'm wrong, but I don't think we've broken through that level except during the COVID crash.
No, I think you're
Yeah.
correct. That's a trade I would consider, gold for silver. Of course, I buy them both. But I think it's a great trade in here. I think silver has a great potential, but again, as we talked about, I mean, if you even look at copper, okay, copper was charging higher. It was 520 just a few days ago. Now it's 430. So it's down almost 20% in a couple of days. You're getting this panic sell. And if you're a trader or an investor, these panics are great opportunities, especially in asset classes like gold and silver that you want to own anyways. You might have to take a little bit of heat, but I think it's a great place to be in and a great opportunity.
Yeah, and I mean, we've been suggesting to our clients different swaps at the moment because prices are relatively high compared to where we've been in the last couple of years in precious metals. So, kind of seeing these anomalies and these opportunities, I think, is also a good thing at the moment.
I agree. Again, I couldn't agree more. I think again, if you can buy both, I'd buy both. I mean, I would wait on gold because I do think it's going lower, but silver's got cracked. You know, it was just $35. Now it's 29. So silver is down almost 20% in a couple of days. So to me that's a value play and I bought some this morning and I'll look to buy some more maybe before the close. I think that it's a great opportunity. And again, could it go lower? Of course it can. I mean, there is no guarantee, but when you see these extremes, and we all know that at some point, if you're watching like the bonds and the notes right now, there is a little bit of they call it a flight to safety. They're exploding higher, bringing interest rates a little bit lower. But I think gold and silver are a better play for that. And the gold and silver are also a better play for inflationary times. So I think that all said and done, I think that to buy silver at 100 to 1 ratio to gold, I think is a great opportunity.
It's just crazy. We're seeing this ratio again. I guess when it comes to the stock market as well, and I guess stocks versus gold and silver, you mentioned how the as we've seen sell-offs in gold and silver along with the stock market over the last decade or so, it seems like gold and silver recover quite rapidly. It doesn't take too long. So how long do you see this sell-off in precious metals lasting?
Well, it's hard to say, but I would target 2,800 in gold. So that's, however long it takes to get there. Now that could change, but as of today, I think 2,800 is the level that we're going to get to. Again, there's no way to say time this market and say when it's going to happen by, only that I expect it to happen. And I expect to see gold by year end back around 3,500. But before then, I would not be surprised if it got to 2,700, but I'm targeting 2,800 right now. I mean, it could be next week. With the volatility we're getting back in the markets now, I mean, now, a $70 move in gold is really no big deal. I mean, I'm watching it now while I'm talking to you. It's just move up and down $10 in each way on virtually nothing. So timing it, I can't do that, but I will say that that's what I would expect. And I would be willing to hold it if I bought it at 2,800, and I would hold it because I think it's going to go back higher.
Now, when it comes to platinum and palladium, I was just talking to Clem Chambers, who has an interesting perspective from the UK there that, they haven't been doing very well because of, the electric vehicle manufacturing and all of that. But your perspective on that, he mentioned how it seems like, gold is for war and also platinum and palladium could be used more in machinery in that regard. What is your take on platinum and palladium right now? Because I just keep being baffled by this ratio of we're talking about interesting anomalies here. We've never seen gold's price, I don't think ever in history, three times platinum's price, even more than three times at the moment.
We're
So
more
what do you
used to
make of
seeing
this?
platinum twice what gold was. Uh, Again, it's hard to fathom what is going on here with platinum. I do think it's a buy at about the 940 area, which is I think is pretty solid. But again, it's a mystery to me as well, Elijah, that platinum has gotten so much trashed compared to gold. I mean, I'm a big platinum buyer. To me, platinum is on sale at these prices, and certainly if you're a physical buyer, I would just buy it and put it away because I do believe that it will recover. And again, it has more than one use. I mean, gold could be used as a currency, but is obviously more used for jewelry and other things like that. Whereas silver and platinum are both industrial metals along with palladium.
Now, when it comes to, I guess, we're looking at the big picture again, and for our viewers just joining at the moment, we're seeing really a sell-off in all markets here. Can you review again kind of some of the main reasons we're seeing this, kind of the catalyst? It seems like it's the tariffs, it might be the jobs numbers today as well. But one of the things that I find interesting is it seems like we were expecting this. It just seems to be that these events, right? Trump kind of confirming that yes, we're going to have tariffs. These jobs numbers seem to be just kind of the catalyst for it. But it's not like this was unexpected. It's just something needed to push it over the edge.
Well, let's go back to Wednesday, Elijah. Wednesday at 4 o'clock, the NASDAQ was up 400 points. That was after what Trump's speech was, and his take was going to be was put out. Then when he talked, obviously they didn't like what he said, and the markets reversed and were down 400 points an hour later. Okay, so it had a dramatic swing. We knew the tariffs were in play, but you're now getting some pushback and some negotiation. The France, whatever you want to call him, it wasn't the prime minister, but said, well, let's not buy any more U.S. companies. So you're having a little bit of a pushback, a little bit of a battle, and that creates panic. Uncertainty creates panic in markets. And it usually turns out to be an unbelievable buying opportunity. And I'm not saying it's right here, but I would certainly say that where these tariffs are not a problem. I'm a big fan of the tariffs. I don't care that China wants to charge 34% back. I just assume become the island of the United States. So to me, it'll work out well. And the jobs number was very good today. The jobs beat by it was expected was 150. They came out with 222. So it was a pretty good beat. And again, there's no surprise when you and I talked last and we talked about President Trump. I said, I don't care how good he is, and I like him, and I think he's great. But also, there's going to be some pain before there's going to be some pleasure. And I think we're seeing the pain.
It is kind of maybe an interesting strategy on his part if this is the idea is, if the stock market is overvalued, maybe have the crash happen at the beginning of his term and then kind of, have an economic recovery coming later. I believe that's kind of what happened with Reagan during his first term. Do you think that is possibly what we could see?
Well, I mean, I don't think he targeted a collapse, but I think he's making the tough decisions right now, as like he says, to make America great again and to bring back jobs into this country. If you look in this country, we don't have very good jobs anymore. Everything is a service industry based. There's no more manufacturing, very little. And I think he's trying to bring that back because, there's a big part of our population that isn't into the AI world, that isn't into the computer programming world. We still have a lot of people my age. Okay, I couldn't get a job today if I had to go out and get a job that would pay me anything. And I think that he's trying to bring back those jobs and bring back that control. I think the biggest thing that we're seeing now is that President Trump is taking control of the world and showing that the U.S. is the leaders and we can deal with whatever you want to dish out. And we're not going to let you take advantage of us anymore, which they had done for the previous 4 years under the Biden administration. We gave away everything. Okay. And again, you look at everything that we've done over the years. I mean, we were at one time in the world, we were the number one in education. Now we're 40th. You know how many countries we have to be behind to be 40th? So all of these things, I think we're standing up, and Trump is saying we are the world leaders. Like it, you can participate with us. Don't like it, then we're not going to help you. And I'm in agreement with that.
Now, you mentioned how gold you're expecting about 3,500 by the end of the year. What other assets do you see will recover quickly and be higher at the end of the year after this crash?
I think gold and silver will recover. I think platinum will recover. I think there'll be a handful of equities that will recover. You have to be those. You have to be a stock picker kind of person. I think the grain markets will recover pretty dramatically. As these prices in oil come down, I think that you'll see a big pop in the grain markets. You got natural gas oil, you got crude oil is down 15% in 2 days. And that's a big help. That's really a big help for inflation. Okay. That's one of the big things that I've always said all along is that, our country is about 80% fossil fuels. Okay. Whether you're making plastics, whether you're delivering goods, whether you're driving your car, whatever you're using it for, we use about 80% of our economy correlates right back to fossil fuels. So if you bring the cost down, which we're now down, we were at 73 the other day, we're now at 61. Okay. So if you bring those prices down, it brings the price of transportation down. It brings the price of delivery, which means that our prices should start to fall at the grocery store as well, which means that more of Americans' money will be able to stay in their pocket and they'll be able to afford to eat. And we're now starting to see some big sell-offs in the cattle markets as well, which have held up forever, and they're getting clobbered today as well. So I think that again, I'd look to the grain markets, I'd look to gold, I'd look to silver, I'd look for some spot equities, some real strong companies that are under heavy pressure right now. Maybe an Apple or something like that. Again, I'm not going to make any direct recommendations, but I think Nvidia has been very well overdone to the downside. And those are places that I'd be looking at. And certainly I'd look at the main indexes, the SPY or the Qs. I mean, those are, again, those have a much broader representation and are much more less affected by news items because they're stable. Even though they're getting clobbered today, they're still more stable than any individual stock.
Before we let you go, Todd, did you kind of just want to give us your broad view of what to expect in the coming, I guess, this coming week, because market's going to close on Friday here, but your take on kind of how do we digest what's coming?
Well, I think if you're in the market and you're long stocks, I would hope I would not panic out here. Okay. If you're not in the market, I would certainly start looking for some value and to be able to buy. If you're a trader like myself, as well an investor, I would certainly for a spot to buy. I'm not saying to buy right now, but you're going to see. I predict in the next 4 or 5 days, you're going to see a monster rally that's bigger than the sell. Okay. Like today we're down, the Nasdaq's down 1,000 as we're talking right now. One day next week, or maybe even today it'll rally back. But one day next week, I think you'll see the Nasdaq up 1,000, which will be a selling opportunity. But if you're a trader, you want to take advantage of both sides. And I'd be looking for a spot to buy into equities for on the short term in the futures market. And then in the stocks, look for some long-term holds that I'm willing to take a little bit more heat on if I have to.
Definitely. And we had a little bit of a connection issue there. You mentioned a, huge rally possibly next week. Can you kind of share some of the things that it sounds like traders might be able to take action there? Could you
Well, I'd be
repeat
looking
what
to
you said
buy.
there?
I mean, again, we're about 7 or 8 standard deviations away from the mean in the S&P and in the Nasdaq. Okay, it doesn't happen like that. Again, there's going to be a rally. There's going to be some retracement to the mean. And again, I don't say that to me it'll be a selling opportunity. But if you want to play, I'd be looking for a spot to buy. I wouldn't try to catch the flying knife, but I would look for the markets to find some stability, look for volatility to fall a little bit, and then I'd be willing to jump in and take a chance, and then just establish how much risk you're willing to take and put your stop in it where that risk tolerance is at, and you may get a huge runner. I mean, I would expect to see in the next couple of days, I'd expect to see the Nasdaq up 1,000, the S&P up 300 points in one day. That's what I would expect.
Fantastic. Well, Todd, we really appreciate your time today. People can go to Bubba Trading. And shortly after we record, I'll put our affiliate link in the description here so people can just kind of refresh the page there in about 5 minutes. You'll see that. And if people are looking to swap to silver, also just give us a call, link in the description there. Any last thoughts before we let you go?
Just be careful. Again, don't get too crazy. Remember to manage the risk that you're taking. And remember, if you're trading the futures market, they may give you a $500 day leverage, but you're leveraging one S&P, you're leveraging $250,000. So just don't get too carried away and don't try to get rich. This is a grinded out business.
Fantastic. Well, thank you so much, Todd, for
Thanks,
this
Elijah.
last minute live stream.
I appreciate it.